87% of 40-year-olds have less than 1 year's salary saved, not because they're bad with money, because nobody told them these 9 specific moves to make in their 30s. Hello, and welcome to Money Machined, the money rules nobody taught you in school. We break down how credit, investing, taxes, and debt actually work, with real numbers, zero hype. New videos weekly. Your 30s are when compound interest either becomes your best friend or your worst enemy. The difference: 9 moves that take less than a day to implement, but determine whether you're working at 70 or retired at 50. And here's what nobody tells you. The wealthy don't have secret strategies. They just do the obvious things that everyone else puts off until someday. Move number 1. Stop treating your 401k like a savings account. Right now, the average 30-something has their retirement money sitting in a target date fund earning 7%. While the S&P 500 index, which you can choose instead, averaged 10% over the last 30 years. That 3% difference, on a $600 monthly contribution, it's $68,000 by age 40. And that's assuming your employer's default fund isn't charging hidden fees, which roughly 40% are. Move number 2 sounds boring but pays off huge. Get your credit score above 750. And keep it there, not for bragging rights, for math. A 750 credit score versus 650 saves you $45,000 on a typical mortgage. That's not a typo. The interest rate difference on a $300,000 loan is roughly 1 full percentage point. Here's the hack. Set up automatic payments for everything. Pay your credit card weekly instead of monthly. Keep utilization under 10%. Those 3 things alone typically add 50 to 70 points within 6 months. Move 3 is where people mess up bad. Your emergency fund is too big. Yeah, you heard that right. Financial advisors push 6 months of expenses in savings. But if you have stable employment and good credit, 3 months is plenty. Why? Because that extra 3 months earning 0.5% in savings could be earning 10% in the market. On $15,000, a typical 3-month cushion, that's roughly $1,400 per year you're losing. Over your 30s, that compounds to over $20,000 in missed gains. Move 4. Open a Roth IRA, even if you think you make too much. There's a backdoor method that's completely legal, and the tax savings are insane. Here's why this matters. A 30-year-old maxing out a Roth IRA gets tax-free growth forever. $6,500 per year, growing at 8%, becomes $500,000 by age 60. And you pay 0 taxes on withdrawal. Compare that to a traditional account where you'd owe roughly $100,000 in taxes on those gains. The backdoor process: convert traditional IRA contributions to Roth. Takes 20 minutes online. Move 5 will sound weird. Start treating your HSA like a retirement account, not a medical account. This is the ultimate tax hack that roughly 90% of people miss. HSAs are triple tax advantaged. Tax deduction going in, tax-free growth, tax-free withdrawal for medical expenses. But here's the kicker. After age 65, you can withdraw for anything. Just like a traditional IRA, max contribution is $3,850 for individuals. If you invest that instead of spending it, 30 years of contributions at 8% growth becomes roughly $300,000. All tax-free if used for medical expenses in retirement. Move 6. Automate everything, not just bill pay, your entire financial life. This is how the wealthy actually build wealth. They make one decision that pays them forever. Here's the system. Paycheck hits. 20% auto transfers to investments. 10% to short-term savings. Bills auto-pay from checking. The key? You never see the money, so you never miss it. Studies show people who automate save 4 times more than those who do it manually. Why? Because willpower is limited, but systems work forever. Move 7 is psychological but crucial. Stop trying to pay off your mortgage early if the rate's under 4%. This feels wrong, but the math is clear. A 3% mortgage, while the market averages 10%, means every extra dollar toward your mortgage costs you 7% in opportunity. On a $1,000 extra payment, that's $70 per month you're losing. Over 10 years, putting an extra $1,000 per month toward investments instead of your mortgage builds an extra $120,000 in wealth. The mortgage gets paid either way. Move 8. Build income streams that aren't your job. Not side hustles, actual assets. The average millionaire has 7 income sources. You need to start building yours now. Start simple. Dividend stocks, RIAs, high-yield savings for your emergency fund. Even small amounts compound. $100 monthly into dividend stocks yielding 4% becomes $60,000 in 20 years, throwing off $2,400 per year in passive income. Move 9. And this one stings. Stop lifestyle creep dead in its tracks. Every raise, bonus, and windfall has one job: building wealth, not upgrading your life. Here's the rule that changes everything. Live like you make 75% of your income. The other 25%? That's your wealth building engine. Someone making $80,000 living on $60,000 and investing $20,000 per year hits $1 million by age 48. Same person spending it all? They're still living paycheck to paycheck at 60. Remember that stat from the beginning. 87% have less than 1 year saved by 40. But here's the thing. You just learned the exact 9 moves that put you in the other 13%. These aren't complicated strategies. They're not secret knowledge. They're just the moves that compound into freedom. The only question is, will you actually do them? If this hit different, we drop money strategies that actually work every week. Not generic advice. The specific moves that separate those building wealth from those wondering where it all went.